we're all working from home, and typically we thought we'd have a lot more time, but it doesn't seem to be the way. If you guys hear my 2-year-old screaming in the background, I had to change rooms just to avoid children around. So it is what it is. Welcome to the COVID world that we live in. So over the next 6 weeks, next 5 weeks, these are the concepts I will be addressing. Each week we'll do a 30-minute presentation, followed by a demo and some Q&A. So we have you out of presentation by 10, and I'll stick around afterwards for some Q&A. So the agenda for today, with every meeting, I'm going to do a little bit of updates just to give you an update on Empire. Today, the focus is the launch of the new ADO, which I'm extremely excited about. So wonderful to get this out to the public. Talk about the why, the what, some features, and some software information. Then again, we'll do some questions at the end. So let me just start off with a quick Empire update, just so we're all on the same page. Yesterday, there was an email that came out. Non-face-to-face is more prevalent than ever. We now have a new verification process that will allow you to attest to identification and verification of individuals using their video function. So if you haven't seen that, please have a look. That's a wonderful feature. We have improved our co-browsing speed. We had some complaints early on about speed. We've moved servers. I'm no tech guy, but simply put, it's faster and much, much, much more improved. So if your internet connection is good, you will be able to do co-browsing much simpler now. Underwriting delays. We do have some underwriting delays we're experiencing. I think every insurance company is at this point, those that are busy anyways. And we're working through it. We should be get through in the next few weeks, but we do appreciate your patience. If there's anything of priority or urgency, Jordan and I are always available to give a hand wherever possible. Critical illness, non-medical limits were increased to $250,000 a few weeks back. So 18 to 40, we can do CI up to 250. And for at least until the end of this month, please take advantage, if it fits your client's needs, the improved FYC. So right now you get 10% more for using Fast and Full. And if you also decide to use the EHQ and e-delivery process combined, it now goes up to 15% more FYC. So 15% more gross compensation is nothing to sneeze at. So take advantage. Wonderful offer by Empire Life. And really the idea here is to help you speed up underwriting for the extra 5% by doing the questions yourself and the email delivery versus paper. Overall speeds up the overall process. So that was your quick Empire update. Wanted to make sure we're all on the same page, and I touched base on some great items that affect you day to day. Empire Par ADO launch. Very, very excited to have this out on the marketplace. This is something that we've been hoping for a little bit of time. Just a quick history lesson. Empire launched the 8-pay contract, I believe, in December 2017. And we've had tremendous success on the 8-pay and the 10-pay, done really well on that. The one hole that we've always had, or the challenge we've always had, is a little more flexibility that the 8-pay and 10-pay, or 20-pay for that matter, did not give us. So with the recent launch of the additional deposit option, it gives us the flexibility and the premium that we were looking for. So if you combine the strength and the breadth of our 8-pay, 10-pay, 20-pay contracts with the ADO flexibility, I think we have a wonderful story to tell. So thank you for those that are here to listen to that story. So why Empire Par? We'll go through some of these quickly. And this would normally be a slide I would just kind of skim through, but the reality is these guarantees, more than ever, are uber important. I know we all have illustration software. I can quote, pick a company, your Manuals, your Canada, your Equitables, pick a company, all illustrate well. What I love about the Empire contract, and again, now more than ever, is the tremendous guarantees. If you're selling Empire, you're selling guarantees. We project well, we illustrate well, but the guarantees is the main grabber. Premiums, cash value, second to none, life insurance with our enhanced benefit, paid up coverages, wonderful, wonderful guarantees you're going to find in our contract. So if you're looking at Empire, this is something that you value. Remember, we have two Par contracts, Estate Max, OptiMax. Just quickly, Estate Max is the life insurance estate value driven contract. OptiMax is the early cash value contract. Par fund is healthy. We are sitting at just under $800 million par fund. Very conservative, which is well positioned in today's market right now. 84% is very low risk. So we're not having too much pressure on our par fund. It's performing well. The industry will see a bit of a push or some downward pressure, but Empire feels our par is strong and healthy. We actually had a wonderful quarter. This is the spring quarter as of the end of March. We actually had a 10% rate of return on our equity portion of the par itself. That was a bit of an anomaly due to some sell-offs, but still nice to see a big number there. Our dividend scale is currently 6% is our primary scale. We are not dropping it down in 2020, and we'll see for years to come, but we're comfortable and happy with our par fund at this moment. Flexibility, remember we have our 8-pay, 10-pay, 20-pay, pay to 100. These are benchmarks of Empire contracts, these contractually guaranteed premium options. So why people love Empire's par is really the customization to go along with the guarantees I referred to before. Pick a dividend option that meets your needs. Your paid up additions is your standard. You have your lifetime guarantee enhanced coverage. If you're looking to really maximize the early coverage for a client, take advantage of the enhanced, which has lifetime guarantee, cash accumulation, which allows you to put your dividend into a separate investment account. Cash payment, more to come on this on the months to come. This is a brand new concept in our industry altogether, where we're just revisiting the ability to move your dividend to cash payment, maybe towards retirement or another vehicle, but something that we can talk about at a later date. Annual premium reduction if you want to use your dividends towards reducing your overall premium. From a product structure standpoint, term riders, second to none. We have T10, T20, T100 as a rider. Critical illness, we have our basic CI Protect, and we also have CI Protect Plus. So not only were we the only companies to offer CI as a rider onto par, we're also the only one that I'm aware of the major fully underwritten companies that offer ROP on expiry and death as a rider on CI, on a rider on Estate Max, or par, I should say. So wonderful flexibility to package everything all together. And of course, the focus of today is our most recent launch, which is the additional deposit option that just was released and is available to you now on our software system. So the what and the why of par ADO. So again, we have different levels of experience in this audience. So I'm going to start with a little bit of what is ADO, and we'll go from there. So at its simplest form, ADO is an election you can make on top of your standard policy to deposit additional funds. So you have your insurance premium for your $250,000 20-pay. Your ADO is additional money that maximizes the MTAR limit. It gets you to deposit more money that goes directly towards buying more paid up additions, in turn giving you more cash value and faster growth on your life insurance. So really, I like to use the word supercharge. The product performs extremely well on its own. Adding in the ADO gives you the ability to have a lot more flexibility on the premium side of things. Premium offset being a big one. I can use the overfunding or the additional deposits to pay up something quicker, or offset meaning the ability to stop paying because the cash value will support the cost of insurance. Also with ADO, if I am overfunding with the additional money, I can stop if needed and restart. I'll talk about that more later. Really maximize your cash value growth, your life insurance growth, and if you're using the enhanced coverage, there's a much faster crossover period, which again I'll address all these things going forward. Target markets, typically successful self-employed professionals. It tends to be the most common scenario, actively working, making above average incomes, looking for somewhere else to shelter some monies, as well as build an estate plan. Typically, we're looking at a 20-pay life pay with some form of an offset as a product for these clients. Second group is your pre-retiree, retiree baby boomer, where they have surplus income and or surplus savings, and they're looking for some form of wealth transfer, estate preservation strategy, where the product solution typically tends to be a quick pay, 8, 10 pay, or 20 pay with an offset, life pay with an offset, are the options in terms of just a basic structure. Every client is different, but this is typically what we see. So some highlights. Again, a lot of companies have ADO. I wanted to point out where Empire stands out and some highlights that you should be aware of as an advisor. So we launched it October. It's launched it a couple weeks back. It is effective any policy sold after October 1st, 2019. So if you sold any par with us after October 1st, 2019, you can add ADO retroactively on the 10 pay, 20 pay, or life pay. There's your minimums at $1,000 annual minimum. That's very generous. The children at $300 annual, $25 monthly gives us a lot of flexibility there and at a low minimum. And it's important to know, and I'll get to this a couple times, the ADO deposit can continue after the contractual premium payment has stopped, i.e. after 10 or 20 years, you can continue on with your additional deposit premium. Our latest software is 11.8. So make sure you have the current version. No underwriting is required when you're adding ADO. We do reserve the right to ask for it, but there's no expected underwriting requirement, additional underwriting if you're adding ADO, which is a wonderful feature. Holiday, which this was a big demand, we can allow you to take an ADO holiday up to 36 months and return without full underwriting, just some simple paperwork to be completed. And if you can add ADO up to 24 months after the policy has been applied for and enforced, again, with a simple form. Term conversions, this is a big question. We get it quite often. So we will allow term conversions. If you want max ADO, we will convert up to 75% of the original death benefit, including the enhanced coverage. So it must be enhanced, and it's a maximum 75%. I'll give you a couple examples of this going forward as well. Illustration-wise, just wanted to make sure that some of the new columns you see make sense. You're going to see three different sections on the illustration. One is your maximum first-year allowable ADO deposit. Second, specified will be the level that you specified the deposit, which could be maximum or somewhere between minimum and maximum. And then the lifetime maximum ADO, this is what you've been pre-approved for. So if my ADO is 5,000 times 30-year expectation, will underwrite you for 30 times 5,000, your full amount up front. Here's an example where we have the minimum is 1,000. We have the specified deposit level at 50,000. We're doing maximum premium here, so we're putting the 71 plus the 50. We're getting close to the maximum annualized premium. And then the lifetime maximum amount is 2.5 million, which is a simple calculation of 50,000 times 50 years. So they've estimated to put the additional deposit in for 50 years, and so total 2.5 of approved ADO up front. So just these are the new columns you're going to see on the illustrative software. Again, as I said, we can add ADO to enforce policies within the first 24 months. Simple form we've just now created. It's a new form on our site, INS 2741, all these names, ADO change form. All we're really looking on these scenarios is, has your health changed, smoking status, and have you been declined for insurance in the last 12 months? So no full underwriting for any of these changes, very simplistic. Term ADO highlight again, so we will allow you to convert up to 75% of a term policy is convertible. And it's important to know that the enhanced coverage must be used. So we do 75% of base plus enhanced. So that would give you, if I had $1 million policy, I could do $750 of life insurance, including the enhanced coverage. And the ADO maximum would be 10 times the ADO. So now, of course, if you did provide us underwriting and insurability evidence, we could do more, but that's what the conversion limit is right now. So pretty straightforward at 75%. So that was some of the highlights. What I really wanted to spend a few minutes on is showing you the features and flexibility. What can I do with this thing? So how can this benefit me and my clients? So I'll start off with a lot of the guarantees. So again, with Empire, the guarantees, the quick pays and offsets are what we are been known for, and what advisors and clients appreciate the most. 8 to 10 to 20, still rock solid contracts. 8 pay still is a rock star. 20 pay is our most common and popular sale. Take advantage. But now, with the use of ADO, we have earlier offsets if you wanted some more flexibility or quicker pace. So these are the quickest offset years we can provide you currently if you're using the various type of cost insurance options. So if I did max ADO on a life pay, I could have an offset by year 5 to 7. So 5 pays up to 7 years, 5 years up to 7 years of annual pay, depending on the age, is your quickest offset. On a 20 pay, it's usually 7 to 8 years for an offset. On a 10 pay, it can be 7 to 8 years. So even though I'm paying a 10-year cost insurance, I could have it fully funded after 7 or 8 years. And these are all at current scale. If I did a -1, it's typically 1 plus 1 year, whatever the current scale is right now. So Again, we have the guaranteed quick pays, 8, 10, 20 as mentioned, or we can be more flexible using the ADO to have enough extra money in the contract to do a quick pay or an offset, if you will, which again, these are not guaranteed to be offset at this point, but if it's funded properly and conservatively using your current N-1 scales, you have a very good projection out there to support our clients and their varying needs. So those are the offset years. So I just want to give you an example of one case that I looked at. So here's a common case I get pulled into and asked to quote on. So here's something that I would put together to help you. So I have a joint last to die, husband and wife, both 60, female 60, male 60. They have a holdco with surplus retained earnings at $250,000, which they would like to pass along, whether it's kids, grandkids, charities, spouse. They just want to be able to pass along some of the money out of the company efficiently, and they're using life insurance as a vehicle to do so. So we're going to look at the 4 different ways we can build this guy to get a quick pay into the contract. So if I use a state max life pay, the quickest I could pay it is in 5 years. So that would be 50,000 times 5, which is $18,000 base cost plus 31,000 of ADO. Initial death benefit $790, cash value year 12 is $135,000, death benefit is $842. I could do a state max 20 pay. It would take 7 years at $35,715, which again is comprised of 18 base, 17 ADO. Initial death benefit's a little bit lower, but it does catch up in later years. 10 pay, I could do as quick as 8 years for these clients. It would take 8 years at $31,250 with my $26,000 of cost and $4,700 of ADO. And it would grow to $817. You see the cash value is growing with the quicker pays. And the good old 8 pay, which does not have ADO on it, but if you wanted a straight quick pay on the 8, we can do it in 8 years at $31,250 with initial death benefit $445, total cash value of $250 at year 12, and death benefit at $871. This is not to say which is better or worse. These are scenarios where it's quickest pay, and I just want to show the side by side. If clients want more security and guarantees, maybe the 8 or the 10 pay. Clients want to maybe go beyond year 5, the life pay may be an option, or a 20 pay. There's not a right or a wrong in this scenario, but I'm just giving you illustrations to show the various options we have. If I did a 5 pay with the estate max life pay, nothing stops me from doing years 6, 7, 8 if I wanted to pre-underwrite the ADO afterwards. So lots of opportunities here, lots of flexibility that we never had before, which I want to demonstrate in this. So again, the beauty of the quick pays, which are guaranteed, as well as the offset options at very early years that help you get the flexibility you and your clients are looking for. That was first one. Second, I'm going to talk about is enhanced coverage. So a lot of Empire 20 pay, life pay products, even our 8 pay for that matter, uses our enhanced coverage. This is the additional term additions on top of your base plan. You see my little chart here. You see in blue the 1 year extra term insurance, which increase the total coverage from day one. At some point down the road, the paid up additions will surpass the 1 year term insurance, and it'll all be paid up additions. So the enhanced coverage is something we see a lot because we have a very generous advanced coverage extender option, which allows your clients to get a lot more coverage at the same price that they would just pay for the base. So in a very family market, normal insurance-driven case, really look at the enhanced with Empire. So as an example, here is the Estate Max 20 pay for $250,000 for a 40-year-old female, which would be $165 of base plus enhanced of $84,000. The premium would be $3,788. Now, on a regular sale, just paying straight premium for 20 years, it will take 26 years for the paid up additions to surpass $250,000. So once it starts at 165, you're getting your paid up additions yearly. It'll take 26-ish years to surpass 84,000 of enhanced, which is fine. The 250 is guaranteed from day one as long as you're paying your premium. But the beauty of ADO is allows me for a much faster crossover if I have the disposable money. So if I did the same client and we added max ADO as an example, so we're putting in $7,193. So we're taking the base of $3,788 from above, plus the max ADO, which is $3,405. The crossover year is now year 6. So after 5 in the 6th year, our coverage has already gone beyond $250,000. And again, it started at 165. So from an enhanced option, you get all the guarantees, the enhanced, and a much, much faster crossover if you want to max out the ADO on that scenario. So another unique feature with Empire. I'm next going to go into the quick pay and keep going. So we've always heard about using your premium to offset and to pay up early, my 5-year pay. I want to get this in quickly. I want to pay it up in a certain number of years. But what I love about this, and just to change your thought process a little bit, is nothing stopping you from continuing your premiums beyond the guaranteed pay period. So here's a 40-year-old male doing an estate max 20 pay. The max ADO I've solved for 25 years, not 20. I've put in the 5 years beyond. I can do 60 more years if I want to, but I just use 25 as an example. The $25,000 premium in this case includes $11,887 of ADO, and again I've solved for ADO for 25 years, going beyond the 20th year. Clients who would be interested in something like this, again, maybe self-employed, high-income professionals, those requiring the flexibility of ADO, but don't necessarily want to be restricted by 20 years worth of payment, that maybe want to continue on long term. So in our software, here's a nice print screen of what this would look like if I built it for you. You have under your coverage tab, we have a 20 pay with $514,000 of insurance, which equals $13,113 of cost. I've ticked off the new box additional deposit option for maximum. And here on the right-hand box, you see $25,000 of annual premium for this client from years 1 to 20. And then from 21 to 25, I just have the ADO, $11,887. So pretty straightforward software to figure out. It's not overly complicated. The only challenge is figuring out if I have a set premium amount. I do have to, it's a trial and error with the coverage amount to figure out how to get the exact number to equal my 25,000, which is pretty common in a lot of the company softwares. But again, Jordan and I are always here to help out as needed. So this is what the software would look like. Illustration would look like this for this client. We'd have an estate max 20 pay, maximum period deposit until year 25. So again, we put 25 years, even though it's a 20 pay. The illustration software, the specified and the maximum is the same, 11,000. Okay. I have a lifetime maximum amount of 297 of ADO, which is really just simply 11,887 times 25. Okay, to get my lifetime max. And the 20 pay premium for the 514,000 is 13,113. So to combine, that's my $25,000 in premium. Now, if the client wanted to continue beyond year 20, they have the ability to deposit 11,887 up front. So for this particular client, we have 25K going in for 25 years. At the 20th year, that commitment stops, but they still have the ability to keep on going with ADO 11,887. That money goes directly into the contract, buying more paid-up additions and really maxing out the paid-up additions, cash value, and estate benefit growth. Keep in mind, the client would only be 60 after 20 years. So again, still a lot of income years ahead of them where they may not want to stop paying for a 20 pay. So having the ADO extension beyond the 20th year is a nice feature. Keeping in mind, this is not a mandated amount. ADO is never a requirement of the contract. It's always optional, whether it's in the first 20 to 25 years or after the 20th year. But it gives you the flexibility you're looking for. Remember before we talked about the 36-month holiday, where the clients can stop paying for up to 36 months of their contract. So a lot of flexibility in this guy that we did not have previously with the lineup that we had. And again, just to be well to the point, the same clients, when you're building these samples, do I do a 20 pay straight? Or with the estate max for solving for the full amount, or do I use the same premium and use max ADO? So the same 40-year-old male that we've been showing in the last couple of examples, I could do 25,000 of annual premium and solve for the life insurance and with no ADO, or I can take 25,000 and ADO in my contract. And what does it look like side by side? Is the initial on the left is the no ADO, on the right is with maximum ADO. So same $25,000 going into both policies for this 40-year-old male non-smoker, but it's a matter of what the client is concerned with or values. The 25,000, if on the first scenario, there is no flexibility in stopping premium, you're committed to 25,000. With the ADO option, you're only committed to 13 plus thousand a year, and the ADO is always optional. But let's assume we put 25 into both. The initial death benefit is much higher on the 20-year pay with no ADO. Total cash value is higher on the max ADOs by year 20. The guaranteed cash value is higher on the 20 pay, no ADO. Again, that would be because we've committed to a higher insurance amount initially, get more guaranteed cash. But again, if we look at now estate value, 45 years later, age 85, you actually have 2.7 versus 2.6 on the death benefit side. Again, all this is based on current scale. This is not an example to show you better or worse, right or wrong. This is just, again, what is needed, what is wanted by the client. Do they want the security and guarantees of a straight 20 pay? Do they want the flexibility of the ADO option? Do they want to be able to extend payments, stop payments earlier with an earlier offset? Whichever they value is how we build the contract. But I'm giving you examples right now in order to give you some ideas and some flexibility that we can have here. Again, if this is new to you or something you just haven't quoted with Empire obviously before, Jordan and I are always here to help out with these particular quotes. So that was some of the features. We're now just about at 10, so I'm going to give you just a wrap up with a few other things. Compensation, always important. How much do I get paid? You guys don't care about that at all, I'm sure. But again, Empire is a little different how we calculate our comp. We base on the entire premium. So FYC and 8 pay is 25, 10 pay is 35, 20 pay is 50, and pay 100 is 50. But again, remember, even on 8 pay, 25 is a smaller number, but it's multiplied against the entire 8 pay premium. 10 pay, same, smaller at 35, but multiplied against the entire premium. Keep in mind, we still have our Fast and Full bonus programs. So just for using Fast and Full, for example, the 20 pay goes from 50 to 55. And if I decide to do the EHQ and e-delivery, it goes to 55. Sorry, that's supposed to be 57.5. Sorry for the typo there. Instead of 55, it's 57.5. So tremendous amounts of money on the table with Empire, very generous. And last cherry on top, if you don't know this already, from a payment mode standpoint, we one of the few companies that calculates your commission calculation based on the mode. So if it's monthly, it's monthly times 12 times FYC versus just the annual premium, which could be a difference of 8.3% in your pocket. So definitely some extra money on the table for a wonderful contract to get paid more for it is a win-win. And renewals, FYC on the ADO is 4%. Bonusable does not apply for the Fast and Full. 4% bonusable and 4% for life as long as the clients are putting in the deposits. Sales concepts to go along with this. We have a million concepts in our ad calc, and that's really what the next 5 weeks are going to look like. There's lists of concepts. But what I'm going to focus on, I talked about at the beginning, personal legacy builder next week, ensure retirement concept, you're using insurance as a part of your retirement. Thriving in the family market. I love this presentation. Hopefully you get a lot of attendance on that. Of course, annuity funded life insurance for children, tax-free savings, maximizer, TFSA maximizer. These are the next consecutive 5 weeks where I will be doing the introduction of the concept and helping it build right on the software in front of you. We've got a bunch of new market material available to you with the new ADO listed inside it, so take advantage of that. That being said, I'm at 10 o'clock on the nose. I am going to open up the software just to show you a quick demo and maybe find any questions I missed as I was blathering on. I'm not sure if Jordan answered some of the questions, but I'm going to do a quick demo just to make sure we all have seen an ADO created. So those that are getting off, thank you. Those are staying on, please. I'll be with you with questions in a moment. So here I have an estate max contract where I have a 20 pay for, a 50-year-old male non-smoker. We have an estate max 20 pay, $250,000. And if I want it, the premium on that is $8,512. If I want to put on max ADO, I could choose anything from a minimum of $1,000 to a maximum of $8,123 for this client, which could give me a total deposit of $16,635. If I wanted to know how quickly I could offset this guy, I simply press my offset button, and earliest is the default, so it'll populate in the bottom right-hand corner. It's offset at year 8, which means it would take 7 payments of the max ADO to offset this contract. So if I wanted to offset early quick pay, the 20 pay with maximum ADO using offset, it would be at the end of year 7. In the 8th year, I could stop paying for this contract altogether. Okay, if I chose to, and I would also match that by putting in 7 years worth of ADO to make sure that it's correct. Okay. So that's how that would look. If I wanted to do a set premium level, this is a little more complicated. I just quick demo, and again, Jordan and I are always here to help. But if I want to put a set premium amount in my contract, take this off for a moment. I put if I wanted to get to 25,000, instead of doing sulfur premium, it's a trial and error scenario. So if I put 250 of life insurance here, and I have $16,000 of coverage, and I want to be able to put max ADO, I have to do it and get this up to, for example, 17,000 versus 16,635. I really have to do a trial and error scenario here where I'm putting in more coverage to get me up to the amount I'm looking for. Oh, what happened here? Okay, 25 max ADO. Wake up. Okay, so 18,000. Oh, let's say we get up to 20,000. 315. So now we're at, if I put 315, for example, a trial and error, I have 20,000, let's say 21,000 of premium going into the contract. So if I want a set amount put in per year, there is a bit of a manual back and forth you do on this in order to get the exact number you're looking for. So you use your max ADO and play around with the number, and this will get you to the actual projection that you're looking for. In terms of just some things I want to make sure you guys are aware of, in terms of reports, if you don't know how to do this already, I encourage you to build your custom reports here. So I have some prefabricated ones: internal rate of return, par ADO deposit, annual dividend. The internal rate of return tends to be the most popular concept. If I open that guy up, it'll give me my internal rate of return on the insurance contract, which will automatically go to the end. So just quickly go through this illustration. We have, again, a 50-year-old male putting in the max ADO plus the coverage here, which was just under $21,000 for 7 years using my offset. Okay. We see our contract growing, and just kind of fast forward to the bottom. I always love showing clients the internal rate of return. If they were to take that same $21,000 and put it into an alternative investment, it would have had to return after 35 years a net after-tax rate of return of 4.22% in order to match what the insurance could have done, which again, many investments can do better than 4.22 over a long period of time, but it's a matter of the conservative and the risk averse nature of the insurance contract relative to what you could do elsewhere. So insurance will never replace an investment, but it's a great diversification tool. So something that I want to make sure you know how to do. The internal rate of return that I calculated here with my different calculations. So again, Jordan and I are here to help if you need to do that. You're able to see some of the value in the contract. Wonderful flexibility, wonderful contracts, fantastic guarantees. Again, I can illustrate to the cows come home all different companies in the industry right now, but the guarantees and flexibility and features built into the Empire contract are something to really, really enjoy and take advantage of when presenting to your clients. So thank you for attending the first Concept Corner. We'll be back next week, same time, same place. It's for personal corporate legacy builder, the idea of reallocating surplus income or savings into an insurance contract to maximize your legacy or gift to children, family, or charity. So without further ado, I will thank you for your time, and we're gonna sign off. So have a wonderful day, everybody. Thank you, and we'll see you next week.